How's it going, guys? My name is Nick, and today I'm going to share a little secret with you on how Warren Buffett is going to make a 49% rate of return on his investment in 2019, and it is basically guaranteed. And on this one investment, he's made insane returns in the past. For example, in 2018, he made a 48% return, and it just keeps on growing every single year. So some of you avid stock market investors might be asking me, Nick, how's that even possible? The stock market on average returns about 7 to 8% per year. Well, do you want to know the simple answer? Buffett is a beast. I'm just kidding with you. Even though he is a beast, you too can achieve these same types of returns just by learning about all of the principles that I'm about to talk about in this video. And if you find that you do enjoy the content or gather any value whatsoever, just hit that like button for me down below. That would be much appreciated. So without further ado, let's jump into the how on Warren Buffett's insane 49% annual return in 2019. Alright, so we all know that Warren Buffett loves buying wonderful businesses in the stock market, but which one is it that he bought that produces such great returns annually? Now, some of you may have guessed it, but the company that he makes an insane annual rate of return on is actually Coca Cola. Way back in 1988, Warren Buffett bought a stake of $1.29 billion worth of shares in Coca Cola through his investment company, also known as Berkshire Hathaway. And after more than 30 years of holding the company's stock, today, his investment value is worth over $20 billion. That's with a B. So over that time period, the total capital appreciation was actually 1,580%. And that translates to an average annual rate of return of approximately 9.1%. So this 9.1% is obviously a lot less than the 49% that I'm predicting for this year, so you must wonder why and where it comes from. But the one special thing about Warren Buffett's investment in Coca-Cola are the dividends that he receives. Dividends are simply company payouts just for holding their stock, and they do this willingly each quarter. If you were to look at the Coca-Cola stock today, you would find that you would only get about a 3.12% annual return just for holding the Coca-Cola stock. But this company is actually like none other because it has actually been increasing its dividends for over 50 years straight, coining itself the term dividend king. So when Warren Buffett bought Coca-Cola, it was actually only paying a dividend of 8 cents per share after adjusting for stock splits. By comparing that figure to 2019, the company will actually be paying a fat dividend of $1.60 per share this year, assuming that nothing goes fundamentally wrong with the company, like people stop buying Coke altogether. So by doing the calculation here, we can find that Warren Buffett currently owns 400 million shares of Coca-Cola. By multiplying the current payout of $1.60 per share by his 400 million shares that he owns in Coca-Cola, we can actually find that Warren Buffett makes $640 million per year just in dividends from Coca-Cola. Now, to find his annual return, all we would do is take this payout of $640 million and divide it by his initial investment of $1.29 billion. And that is how we get to an annual rate of return of 49.3% in 2019. Of course, this is all based on his initial investment, and if he were to buy the shares today, he would not receive that rate of return. But before you click away, there are some very important takeaways we can gather from this information and Warren Buffett's example, and they can actually help you make these types of returns in the future too. First of all, dividend investing can be very profitable with a wonderful business and a little bit of patience. If Warren Buffett decided to sell his stake many years ago in 2005 and then all of a sudden buy it back now in 2019, he would only be getting that dividend yield of 3.1%. It's absolutely no comparison to the 49% yield he's getting today just for holding those shares for 30 years. And honestly, guys, this is the reason why he's never going to sell Coca-Cola stock, because he can keep making these consistent returns every single year, provided that the company keeps paying out dividends. The second takeaway is that capital appreciation is not the only type of income that you can make from stocks. Warren Buffett's example with Coca-Cola just shows how strong the effect of dividends can be on your investment returns. Like I said earlier, without including the dividends, Warren Buffett would have only made a 9% return annually, and that's just above average. So dividends are a great thing to consider when buying a stock and can help improve your cost basis. Finally, guys, point number 3 is that anyone can achieve these really high rates of returns, like 49% per year, almost guaranteed, just by learning what Warren Buffett has taught us. By doing your own research on wonderful businesses that pay out a dividend show a track record of increasing their dividends year over year, as well as show modest capital appreciation in the past, you're basically guaranteed to make money in the long run. Just by being patient and holding your money in excellent companies that increase their dividends year over year, you're essentially increasing your yield on cost and you're able to make those high returns well into the future. So guys, an example of a company that would be increasing their dividends year over year would be Apple. We can find just through a quick Google search that their 5-year average dividend increase is about 10.5% per year, which is actually pretty good being in the double digits. Some other good starting points to consider in looking for dividend growth companies would be in the consumer staple sector or the banking sector, just because the people are always going to need these types of sectors and they're always going to be around. Therefore, these companies are likely to pay out dividends for a long time into the future. Anyways, thank you guys so much for watching the video. I hope you gathered some value into this and why dividend investing is a very profitable venture. If you haven't subscribed already, just subscribe for more content on personal finance, business, and investing, and you won't be disappointed. Also, if you did enjoy the video, just smash that like button below. I would really appreciate it. And I'll see you in the next one.